What's up, Banter fam? It's your host, Miles, and in today's show, I'm going to be running through Fantom, digging through the data, looking at Fantom's strengths, looking at Fantom's weaknesses, and giving you guys an update on some major signs that I'm seeing, both in terms of price and in terms of the on-chain data over the last few weeks. It's going to be a massive show, and then at the end, I'm going to answer your questions, because I know a lot of you guys have questions to do with Fantom, to do with its ecosystem, and I feel like I haven't updated you guys on Fantom in quite a few weeks, so I wanted to come on and give you guys a comprehensive kind of overview of my thoughts, my feelings, and my sentiment towards FTM and the Fantom ecosystem itself. Before we get into the Fantom talk, I quickly want to run through the charts, because right now we're seeing quite a lot of volatility, and there's a very key level that Bitcoin needs to reach now in order to continue this upwards trend. So overnight, we actually got the announcement that the ECB was raising rates 50 basis points, 0.5%, which is their biggest raise in 11 years. So quite a big raise from Europe. And the Bitcoin price did initially react negatively to this, but it actually ended up bouncing off the $22,500 range. So I just want to run you guys through my Bitcoin structure at the moment. I'm on the 4 hourly right now. We're continuously making higher lows on Bitcoin. And over the past few weeks, it's basically been operating like a ladder, like a step ladder. Higher low, higher low, higher low, higher low. And it's basically been in an upwards trend, breaching every major level of resistance, holding on to the 200 MA and the 50 MA, and basically making higher highs every single time. But at the moment, we are in a critical area, a very critical area right now. So what we need to see from Bitcoin is we need to see a push up past the 24K, and we need to see a retest of this 24K region. Because right now what's happened is we've reclaimed 23K, but we're starting to lose a little bit of steam on the way up. So this is what I see from Bitcoin. If we do fail to make a new high, if we do fail to test this 24K region, I do think we come down. And I think it's very logical at that point we expect a test of this key support, which is between 21,650 and 22,000. That is a key region that I think Bitcoin needs to test, or at least looks like it wants to test, if it can't make a higher high. If it does make a higher high, then I don't think we come down and test that low. I think it's more likely, based on what Bitcoin has shown previously in its history, that we come down and we test the 23 again, or potentially even higher, testing like the $23,300 level. So we really do need to see Bitcoin make a higher high here, or I do expect us to come back down around the $22,000 zone. Just remember, this is very strong support as well. It's his previous wick high, which is $22,549. This area is also key support. We actually didn't close below it on the 4 hourly. We may have on the hourly. Let me just check that. No, we didn't even close below it on the hourly. So that is a very, very strong support as well. So that could potentially be somewhere that the Bitcoin drop stopped, theoretically, because that is very, very, very strong support. But there is also a chance we come down to the $22,000 mark. So right now, these are my two key levels. These are the two major horizontal levels of support that I am eyeing. And just take note of the 200 EMA as well. Something Bitcoin has adhered to quite strongly in terms of support and resistance in recent times. And we probably do see confluence here of a bounce with the 200 MA if Bitcoin comes down. Now, of course, the other scenario is that it continues to push higher and makes a higher high. That would be amazing bullish continuation. In that case, we would look for the pullback, and then we'd be looking at longs on altcoins. However, I'm not longing right now because we are showing a little bit of weakness. Bitcoin's kind of losing a little bit of steam, and we don't have confirmation that we are going to go and test that level. So right now, I'm not really looking at longs until we get the higher high and the pullback, or we look like we're breaking 23 and the pullback's in play now. Then, potentially we look at some shorts. The Ethereum charts are actually showing a little bit of a top. It's looking a bit toppy. Overall, Ethereum has been extremely bullish. Ethereum has been a coin that's basically led the entire market. And at the moment, basically all the altcoins are following Ethereum's lead right now. But if we do look at the 4 hourly, we can see that we are struggling to print a new high. 2 wicks lower than the original high indicates a slightly weakening Ethereum. However, if we zoom out, we can see that we are clearly still above this channel. So as long as we are above this channel, Ethereum remains in bullish structure. What would invalidate this is a breakdown, so another lower high and then a break through this structure and a test of 1420. Now, 1420 is a very, very, very key level, because if Ethereum breaks below 1420, I do expect us to come back into this range between 1200 and 1280. Now, this range is going to be a significant range because that is basically the final support of this bull trend. If we went back into this range, the entire bull trend would be reversed and we'd be back into sideways accumulation and probably eyeing new lows. But if we do hold on to this 1429 level, we're basically not going to get down there again, and we can continue, with bullish continuation. So that's what I'm seeing on the Ethereum chart. Really need to hold this channel. If we do break, it's really not the end of the world because we do have 14.2022 as that strong support. If we break that, we are going to come back down most likely into this box. So that's one I'm eyeing. On the Ethereum chart, we know it's leading the altcoins at the moment. And if we look at Bitcoin dominance as well, we can see that the dominance continues to drop. It's looking like it wants to come back down and test the 42% region where it tested the other day. Although it may not get there. It may go down a bit, make a higher low, and then push towards this upper trend line, which would be an indicator that Bitcoin gets a slight reversal relative to the altcoins. The altcoins obviously want to lower Bitcoin dominance. That's why Ethereum's rallied so hard, because liquidity is going into the alts first before Bitcoin. A push up in dominance may indicate a larger market pullback, likely to the $21,800 to $22,000 range. That's something that's very, very likely. If we do get this pullback in the market, but just keep your eye on dominance and how it reacts to this support level here. So what am I doing to actually action this? Well, I told you, the long setups are still in play right now. So if we make the higher high, we pull back, I definitely am looking for longs, 100% in the short term. Remember, I'm not a professional trader. I'm just telling you what I'm looking for in the short term, in order to, do a little bit of trading, because I like to keep the dollars ticking over a bit in my account whilst my spot bags are doing their thing. So two separate portfolios. I got my spot, which is the majority of my net worth. And then I've got a smaller amount, which I use to actively trade. That's what I'm touching on right now. When we get into the Fantom stuff, that's a lot more prevalent to the spot positions. So yeah, I think if we don't make a higher high, we're coming back. This would be a zone that I probably long in. That may take a couple days to play out. I may consider shorting today. I definitely am considering shorting today if we're showing a bit of weakness here. We already see we're kind of ticking over on the 4 hourly. If we go to the hourly, it looks like it still could break higher, so I won't short just yet, but I'm keeping my eyes on that very, very closely to see if there is a short opportunity, because if we do fail to make that higher high, then I said I'm expecting a pullback to the 22 region, 22.5 at the very least, which would obviously result in a drop in alts. So in the short term, I may consider a little short, but if I do it, it'll have an extremely tight stop. Let's say you short Solana, for example, that would have an extremely tight stop. So I'd be looking at entering around the 44 at the top of this trend. Once again, I need to go through this in my own time and get my exact setups, but I'm giving you the logic here in case, you want to consider doing this. I'd probably go closer to the trend line. If we do end up breaking down, my next target would probably be this $40 zone, because that's the previous wick. In fact, we got an amazing long. I think yesterday on the show, on my Instagram, I gave you guys this setup and we made amazing profits from that. In fact, yesterday was my best trading day in many, many, many months. So we had a very, very good day yesterday on the longs, but this will be the zone as well. That we probably come down and test if we do get this rejection. So longing Solana around this rejection of trend could be a decent play for the pullback into this zone. That would probably indicate a bit $22,500 Bitcoin. And then if Bitcoin broke that and did go down into this green zone, then Solana would probably be looking at $37 to $39, which is in line with this previous trend. So you've got two targets for TPs, the $40 to $41 range, the $37 to $38.50 range, depending on, when you're happy at the end of the day is when you take profits. And yeah, around this trend line here. That's just the Solana trade. There's many, many others. Fantom, obviously the topic of this video, is a similar one. Fantom has that horizontal structure at 0.34. It also has that high that it made at 0.357. I don't think we get there unless Bitcoin makes new highs. But, this is another one that you could potentially look to do the same thing as Solana. I haven't updated my ranges. It'd probably be a little bit lower. But yeah, this was actually my long zone yesterday. We bounced just off. And in fact, this trade was like to a T. Bounced just off the long zone. Did very well on the way up. But if, Bitcoin does look like it's losing steam, then, we always can come down and test this level. And then we have that lower level at 26 to 27 to test as well. So remember, if you do want to trade, you can go to the link in the description to sign up for a ByBit account. We're giving away a $4,200 bonus if you sign up for a new account and deposit. And you can also have your account 10x live on the main show. So make sure you get involved with a ByBit account if you want to get involved with some trading, and we have some nice bonuses for you as well. And it helps support the channel to keep the channel running during this bear market. We're here every day to give you crypto content, credible crypto wisdom, and we're working very, very hard to provide that to you guys. In fact, if you saw what happens behind the scenes, I think like more research, more dedication than ever is going into this channel at the moment. So even though like the viewership numbers are down and there's less public interest, the amount of effort that we're putting in behind the scenes is, I think, at an all-time high. So that's a testament to the team at the moment and their work ethic. So yeah, this channel really is the place to be for crypto at the moment. And I think, there's very exciting things to come over the next few months in terms of our content. But today, I do want to talk about Fantom because that is the big topic of the video today. And it's also the big topic that I get continuously asked about for good reason, because I know a lot of you hold it. I was a big proponent of it, for a long time. It obviously had that record TVL increase to $12.7 billion. It's had a major drop off since Andre left. There's been a lot of FUD. The market tanked. What do we do with Fantom now? Is it something I'm still bullish on? Are we still adding to our bags? Because I asked what you guys would want to see on YouTube on my Twitter account. By the way, follow me on Twitter. Miles Deutscher, link in the description for that. And you guys said Fantom. It was basically Fantom. And I said I'd add to this for sure on today's show. And then I thought, why don't I just do an entire show on it? Because there's clearly demand to hear about Fantom, and it's clearly something you guys want to hear me talk about. And to be honest, we're due for an update. We are due for a Fantom update. I haven't looked at it in a little bit. So today's show is going to have some bullish points, and it's also going to have some bearish points. I'm going to give you an objective overview on where I sit in terms of Fantom at the moment and my honest thoughts on Fantom as an investment. I'm going to start with a tweet from Mark Jeffrey because this sums up some of my original thoughts very, very well to do with Fantom. And he says, everything wrong and right with Polygon, average tech, insane business development, and everything wrong and right with Fantom, which is Polygon bit in reverse, insane tech, non-existent biz dev. Now, basically, if you guys don't know, Matic has been very active with its business development and its partnership announcements. It'll launch the Disney. It announced the Disney partnership, the Stripe partnership, the Meta partnership. It's been very active with partnering with companies in the space. It's been very active with acquiring new talent. And it recently led, a massive funding round of $450 million led by Sequoia Capital in February. So what Mark is alluding to here, and it's something that I agree with and touched on in my thread, is that Polygon is very active in business development, and that's one of the reasons why it has been able to be one of the best performers in this bear market. It went on almost, a 2x or a 3x rally from its lows. It's been very strong. I think all-time highs to current levels are minus 69%. Fantom, on the other hand, is minus 90% in terms of price. So what separates the two? And what does this really highlight? I think what it highlights is Fantom's business development is not quite up to scratch with other projects. Now, albeit Polygon is a very high bar in terms of this. That is clearly one of their major focus. Fantom, in terms of business development, if you guys don't know what business development is, it's the active pursuit of partnerships, strategic partnerships in the space, strategic business maneuvers in order to position the company for success in the future. That's something Polygon's doing. Fantom, although it has amazing tech, I think it isn't as active on the business development front, and I think it's one of the major downfalls that it hasn't been able to procure as many partnerships, procure as much funding as some of these other projects. Now, there's probably many reasons for this behind the scenes, but I do think it is an issue because it does limit its growth potential. It certainly limits the narrative itself because crypto trades off hype cycles and narratives, which isn't a bad thing because if they are building it on the back end, focusing on the tech, it's not a terrible thing to work in silence. Polygon come under some scrutiny that it was too aggressive with this marketing push. But I still would like to see more from the team in the way of marketing, to be completely honest. Because his other point here is the tech. Fantom's tech is fantastic. Here's the thing to know about Fantom. It uses an ABFT DAG consensus mechanism that Andre himself helped create. It's very, very strong. In fact, we've seen Fantom cope with 1 million to 2 million transactions a day and have gas fees of less than $1 or less than 10 cents at times, which is absolutely incredible. Like right now, the gas fees are like 0.001 of a cent, which is unbelievable considering it's doing 1 million plus transactions a day. So in terms of scalability, right now, as it sits, Fantom's tech is one of the most scalable in the world of blockchain. So the tech gets a major plus from me, and they're only working on improving it. So they're working on technology FTM, which is Fantom Virtual Machine. That's intended to replace the Ethereum virtual machine. So if they can manage to pull it off, it'll be the first project to successfully do so. It will be the first project to have scaling utilizing EVM, and it already has an incredibly strong base to begin with its ABFT Lachesis consensus mechanism. So I do think they have been active in working on the tech. That is clearly their focus. They've hired many professors over the world to work on this technology, and it's something that is a work in progress. And we've seen the upgrades already launch on chain. We saw SnapSync, which is a huge update, which transferred from testnet to mainnet a month ago. We saw the Fantom stablecoin being worked on by Andre Cronje, who was back for some GitHub commits. We've seen Fantom on Fire, which is a new Fantom burning dashboard, which visualizes the Fantom burning mechanism, which I'll show you right now. Basically meaning it's indicating Fantom burning, because obviously Fantom gets burnt every time gas fees are burnt on chain. The more transactions, the more gas is burnt, the more deflationary Fantom becomes. So there's been major upgrades in terms of the tech in the back end. So what is kind of hampering its price performance if the tech is so great? Well, it's kind of what Fantom is great at is also their biggest weakness. The fact they're so tech focused kind of means that they lack in the business development front. The major issue I find with Fantom at the moment is its lack of VC backing. Now, a lot of people crucify me for saying this on Twitter, but let's be completely honest here. VC backing is a major constituent of success in crypto. Like the projects that are in the top 10 right now, the majority of them have massive, massive backers. Like let's look at what Matic did. They raised $450 million in February from Sequoia Capital. That is a massive inflow. They've got Binance, they've got Coinbase as major backers, they've got Tiger and Electric Capital as major backers. All these top projects, BNB, highly backed. Obviously, Ethereum's highly backed. Cardano and Solana, very backed. In fact, Solana has some of the most VCs in crypto, backed by Alameda Research, etc. Polkadot is the most commonly held VC asset, according to Masari's Q2 data. So Avalanche has massive VC backing. Basically, the entire top 15 thrives on VCs. So when people say, I hate VCs, I don't want to invest in a VC chain. Well, I think that's kind of misguided, because we know how important in a bear market VC backing becomes for two reasons. One, runway in terms of being able to, sustain ecosystem development even with diminishing market conditions. So that's probably something that's affecting Fantom at the moment. The fact market conditions are softening, they don't have as much financial runway as some of these other projects. That hampers what they can do in terms of biz dev and in terms of development. And I think it does become an issue in that sense. And I think in the other sense, reason number two, it's strategic partnerships. The not having as much VC backing means you don't have as many connections in the industry. Obviously that affects exchange listings. Like Fantom, for example, never got a Coinbase listing, even though it's been a long time coming and it probably should. It hasn't gotten a Coinbase listing yet. That's just one example of insider connections. And then you've also got VCs that facilitate partnerships with real life companies. So probably some of Polygon's investors had the partnerships with Disney, Stripe, Reddit, etc., and were actively pushing for those partnerships because of the connections that they had. So that's one thing I think you miss out on. Now, on the positive side, not having VC backing for Fantom means that it is mostly community driven. Now, having a community driven project is a huge benefit, because during bull runs, that is what you need. At the end of the day, retail is what drives growth in crypto. And Fantom exploded because it had that very strong community, and it still has a very strong community. The stronger a community in crypto, the stronger the price performance of a chain is likely to be. And that's why we saw this massive explosion in TVL. So that is a major plus for Fantom. The community is very, very strong. You can't shy away from that fact. However, that also works in reverse. That's kind of a reverse mechanism, right? Because when market conditions soften, retail is the first thing to go. Institutions aren't the first ones to leave. Often the retail are the ones that panic sell and kind of, panic out of their positions, go risk off, start to withdraw their funds off DeFi protocols, etc. And when retail starts panicking, that's what results in major capitulations in price. Now, what we've seen from Fantom, the fact it has such a strong community that was a major blessing in the bull market became a little bit of a curse in the bear market, because a lot of that community ended up leaving because a lot of them were there for the money. There was a lot of DeFi Ponzi's. Fantom became the desired EVM chain at one point. It became the DeFi chain. So when the DeFi narrative inevitably took a hit following the collapse of Luna, chains that had more exposure than others to DeFi took a hit. Now, Solana props up a lot of its transaction volume with NFTs. Obviously, Matic is working hard to become that Ethereum L2 scaling solution. Ethereum is not going anywhere. Whereas Fantom, on the other hand, it was known as the DeFi chain, and it still is. And DeFi is not dead, by the way. It's not going anywhere. But it inevitably means it took more of a hit than these other chains because it was so DeFi focused and because it was so retail focused. So we saw the $12.7 billion in TVL actually end up becoming $858 million, which is by far the biggest drop of any chain. If we look at the other chains, Fantom dropped the most from its peak to trough. Even for the month, Fantom's down 14%. All these other chains are up for the month. Fantom is the biggest loser in the entire month in terms of TVL. Why? Because it's retail dominant and the market's going risk off given the macroeconomic conditions, which obviously means that results in net outflows. And I'll show you the graph here. It's what's on the thumbnail. This is the daily net outflows of Fantom. Actually, since then, it has ticked up a little bit. If I can get the latest data for you guys, that would be much more relevant. Here we go. This is the net outflow graph. Now, net outflows are the amount of deposits versus withdrawals on a chain. So we could see that the net outflows have significantly outpaced the net inflows on chain, meaning more money is being withdrawn than it is being deposited. On the bright side, we are seeing deposits starting to increase again. In fact, yesterday was the first day in almost a month, apart from July 11th, that Fantom actually had more deposits than it did withdrawals. So that is a good sign for Fantom that this is starting to tick up this month and that people are starting to get involved again. That is a very good sign because honestly, on July 8th, I was extremely worried. This was just like a complete bleed from Fantom. So if this could continue to tick up, that would be a bullish sign of a recovery. However, it does have me worried that by and large, net outflows are significantly outpacing net inflows. And obviously that is reflected in the TVL. But the daily transactions, funnily enough, have held up significantly. Fantom's still doing 1 million daily transactions a day versus AVAX, which is like 200,000 on the C chain. Ethereum is doing 900, so to 1.1 mil. So Fantom's on pace with Ethereum. Solana's doing more because of its NFTs. But Fantom basically outpaces most of the top 10 EVM chains in terms of daily transactions. In fact, it's a top 5 chain by daily transactions. But it isn't a top 5 chain by daily active users. So that kind of begs the question, why is Fantom's transaction volume so high? The first logical reason when I paired it against the net inflows was potentially the transactions were high because people are withdrawing money. And transactions work in a linear fashion. The daily transactions don't reflect whether someone's withdrawing or depositing. So an increase in daily transactions can reflect with an increase in net outflows. That's one of the reasons why Fantom's daily transactions were high. Some people panic out of their bags and the transactions go up. The bullish side to this is that it's extremely utilized and the users that do use it, even though it's not as many as some other chains, they're very passionate and they use it a lot. And there's a lot of development happening behind the scenes as well. Fantom is still on GitHub a top 10 EVM chain. So there is development happening behind the scenes. This props up transaction volume. So that's one of the reasons why it stayed so strong. So there's the bullish and the negative argument. The negative argument being the net outflows likely indicate daily transactions are kind of working towards withdrawals on the platform. And then the benefit is there's still people actively utilizing the chain. And anyone calling Fantom a ghost chain, part of the pun because of Fantom's ghost branding, I think that's very misguided because it is being heavily utilized. So we can't ignore that. And we can't say it's a ghost chain because it is being utilized. In terms of Fantom's value accrual from a price perspective, the more it's utilized, the more Fantom's burnt. Just keep in mind, though, that the total amount of Fantom burnt is actually quite low in respect to its total market cap. So it's ranked number 63 on CoinGecko right now. I think its market cap, if we just get it up here, no, not Evmos, I want Fantom FTM. It's probably like 847. 1 billion fully diluted. It still has some dilution through the validators. I mean, it's only burnt 2 million, so it's not a huge difference compared to its market cap. Remember, one of the main value accrual mechanisms for Fantom is the 14% yield you get on staking it through the validators. So you're incentivized to lock up Fantom in order to earn these rewards. But I think one of the value accruals from L1, specifically Fantom, that not a lot of people keep in mind, and one of the reasons why it pumped so hard last year, is that the Fantom token itself, although the gas burn may be minimal, it is still a key part of the ecosystem. And transacting using the Fantom token on any Fantom dApp is a lot easier than using tokens, other native tokens from other chains that have been bridged across to Fantom. In most times, you're going to have success swapping with Fantom, utilizing it on dApps, utilizing it on transactions. So overall, the more users the chain can accrue, the more value it accrues indirectly from people actually using the token. Because if you need to transact on the Fantom network, it's likely you're going to have to get Fantom off an exchange like Binance and transfer it onto your MetaMask to interact with dApps. And that's going to result in more demand for Fantom itself. And then you have the double-pronged effect of people staking. But that value accrual only operates successfully if the demand for the token exceeds the amount of supply for the token. The supply in this case being the amount of people that are actually selling Fantom. So obviously, over the past few months, that has been to the negative side because more people have been wanting to sell than wanting to buy. And that's for a few reasons, as I pointed out. I think the lack of VC funding had people worried. The fact it was Andre left had people worried, even though he never actually left. That is still a huge narrative. And regardless of whether you think he's working at Fantom or not, it doesn't matter because as long as people don't think Andre's at Fantom, that narrative will continue to play out to the downside. And that's just what ended up happening. Obviously, as I spoke to before, a lot of the DeFi Ponzi's collapsing or at least, getting significant withdrawals. It ended up in a lot of hype being taken out. Because in January, February, the hype was solidly, it was Daniela Sesta, it was Andre Cronje. I 100% admit I did a lot of staking videos on Fantom at the time because it was exciting and it was something I was passionate about. And Fantom had the best dApps in DeFi. Like, let's be honest, the dApps and development, money aside, TVL aside, Liquid Driver, Spirit Swap, Tomb at the time, like Spooky, these were very cool protocols, very good to use, very innovative. Tarot, Reaper, like these were the first of their kinds in a lot of cases. Justin Bebis, an amazing developer working on Reaper. Frax deployment ended up occurring. There was a lot of great development. Beats, how can I forget Beats? Probably it was like a balancer fork, but it was terrifically done on Fantom. And that was one of the most innovative and useful protocols in crypto. And then they introduced VE locking, and it was a fantastic time. And I did videos on it, of course, and I was bullish on it, of course, because of how exciting that ecosystem was. Unfortunately, not a lot of us saw the unwinding that was soon to happen would happen to such an extent that it did. Obviously, Luna kicked off the unwinding. We knew that macroeconomic conditions were becoming a little more bearish, but I don't think a lot of us anticipated it to happen so quick, which all came back off the back of that UST collapse. So I almost think the failure to see the UST collapse, and I take responsibility for that to some extent, but all Luna investors should take responsibility for that as well. The failure to see that also ended up reflecting negatively on the entire market, Fantom included. Although it had already dropped to like $1 by then, that just added so much fuel to the fire, and that was really the last leg of capitulation, which resulted in that next 50%. But I do obviously, I do obviously feel bad a little bit at the time for covering Fantom so much and then the price coming down and then people kind of play the blame game. But at the end of the day, like I just judge protocols based on what I see fit at the time. And it was a protocol that I was extremely bullish on due to the fact that it had some of the best dApps in crypto, some of the best community in crypto. And no one could really predict what was going to happen, ended up happening. But based on the current moment, on July 22nd, what do we see for the future of Fantom? Is it game over? Is it all over for Fantom? That is a major question now. I'm using a lot of past tense. I was bullish, but am I still bullish? Well, I will give you my thesis. And this is, sorry to make you wait 28 minutes for this, but I thought I needed to kind of give you guys the full rundown before I get to this. Am I still bullish on Fantom? In some ways, yes. I am bullish on the tech. I think the tech is fantastic. And I think if they do nail FTM, it becomes one of the biggest chains in crypto. And I think development floods back onto Fantom because it then becomes one of the cheapest and most scalable chains. Do I think that the lack of VC funding, given the current macro environment, has changed the fundamentals? Do I think that the lack of biz dev, given the current macro environment, has changed the fundamentals? Yes. The fundamentals are not the same as they were in January and December. If you think they are, you're frankly kidding yourselves. That's why the maximalism on Twitter pisses me off a little bit. I understand being loyal to one project and being a project maxi, But at the same time, it doesn't make much sense to not change your thesis. The best investors in crypto are willing to take new information in and change their thesis. I respect traders and investors a lot more if they're willing to change their outlook, reposition themselves accordingly, instead of holding on to a dying or a losing narrative just for the sake of being a maximalist. I think that's a major issue in crypto, and it's one I have actively avoided not to fall into. So when people say, oh, you've ditched Fantom, it's not true. My thesis just slightly changed. I'm not bearish on Fantom. In fact, I'm accumulating Fantom just at a much slower rate than I was, for the fact that, honestly, if we look at Fantom's market cap positioning at rank 62, given the current macro environment, that's fairly risk on compared to other L1s. Now, it doesn't matter how great the tech is. The market will price a coin based on its risk profile in a bear market. Now, although Fantom in a bull market has some of the best upside out of any L1, given the fact that we're not in a clear bull trend and we're not in a bull market anymore, its ranking is reflective of the amount that I'm willing to outlay on my DCAs. I'm not going to go crazy DCAing into Fantom right now because I still believe there could be further downside. And I personally want to protect my portfolio by diversifying my assets. So am I buying Fantom? Hell yeah. I'm happy to accumulate Fantom, for the reason being, if FTM succeeds and the tech succeeds, I think it has massive upside. From $840 billion, it could hit 400 billion by the time that the market recovers. But when it does, I think Fantom could have a huge shot at a 10x to a 20x, 100%. Like, I don't doubt that in one bit. But what I do want to be responsible and cognizant of in the meantime is keeping diligent risk management, and that means I don't want Fantom sitting as more than 5% of my portfolio. I'm happy with the 5% allocation. It's probably sitting around there at the moment. I haven't checked exactly. I think it's slightly less than 5%. I mean, I'm more than comfortable with 5% in Fantom and maybe another few percent in the ecosystem. If it goes to 0, I don't lose my entire portfolio. I lose 5%. If it 10x's, I suddenly make massive gains. And, I effectively have a shot at doubling my portfolio or adding another 50% onto my portfolio from one bet. So that's exactly what Fantom is. It's a bet on emerging tech that may fail, but ultimately has massive upside. So you have to weigh up what percentage of your portfolio that you want to put in. On the development side, there is some exciting stuff happening. I think Liquid Drive is still one of the best protocols in DeFi. And the team has been working very hard on deployment of new vaults. They launched shadow farms. There is potential that they deploy cross-chain. A lot of Fantom dApps are going cross-chain. We saw Beats launch on Optimism. We're seeing Tomb start its own L2. We're seeing Fantom kind of become this hub for development, almost a testnet, and then a lot of these projects are branching out. You may view that's bearish for Fantom. I don't think it's bearish at all. I think some of the amazing development that happens on chain, deserves to shine on other chains as well. And that only puts the limelight back on Fantom and the amazing developers developing on Fantom. So as long as these projects, stay true to their loyalty and continue developing on Fantom, I don't view it as bearish for the chain. In fact, if you're a DeFi project, going cross-chain makes so much sense instead of just hampering yourself to one project. Now, emissions become slightly more challenging in that respect, but it still makes a lot of sense from a growth perspective. So Liquid Drive is still a project I really like, to be honest, but it's just very risky, right? It all comes down to the macro, and even though a project may be great, it doesn't mean it's an ape right now. It's probably something I accumulate very slowly, and when I say slowly, I mean like 0.1%, maybe I'll chuck in once a month. But, Fantom sitting around 5% is an allocation that I'm happy with. So that's kind of my overview right now, but I know you guys probably have questions off the back of that. So I'll answer some Fantom related questions right now and just give you guys, a little more insight just over the next 5 minutes as to anything that you may be confused about or you want me to clear up, because I want to be totally transparent. And yeah, Fantom's something that I'm still going to cover because the DeFi and Fantom's exciting. And as a guy that's passionate about DeFi, it's something I do want to cover. It's something I do want to cover, of course, because the DeFi is incredible. It has 253 protocols, but I also don't want to lead people astray with crazy portfolio allocations in what is objectively a risky project compared to other projects. Fantom Wallet is a good wallet. You could stake through it. I use the Fantom Wallet for staking. It's all about the tech. I mean, you have a good point here, Godfather. Like, if the tech does succeed with FVM, then that is what is going to incentivize developers to develop on chain. If you're a dev, you want to develop on the chain that's the cheapest and the fastest. It makes your life so much better. It makes your DApp perform so much better, and it just makes everyone happier. So yeah, it is all about the tech at the end of the day. The only issue is they have a lot of competition. There's a lot of other massive L1s like Near Protocol, like Solana, that also have amazing tech. And if Fantom FVM keeps being delayed, and it gives these other protocols time to eat up market share, then it becomes harder even with great tech to advance. So I fear that it gets overtaken on the tech department because there's a lot of great tech. Nia has fantastic tech with its sharding. Polkadot tech is brilliant. I love Polkadot's tech. Solana, very fast. Obviously, it has issues, but very, very fast, very scalable, although it's centralized still. But Fantom is up there. Fantom's not far away from these other guys. I think Fantom can succeed. Being a DAG, it's very unique. It is centralized. It is relatively centralized. Another reason why Fantom isn't priced as favoringly on the market as some of these other protocols. Fantom won't die hard community. No, it won't die. It won't die. It won't go to zero. But it depends how you define die. Like, if it went to 2 cents and still had a loyal community, you'd probably consider that dying. But I don't think it's going to zero. No, not at all. Because the community is very loyal, and that's one of its major selling points. Dump Tomb. I mean, a lot of people are asking me about Tomb. My thesis on Tomb, I mean, it's probably a separate conversation because it's very long, but they're pivoting. They just released Life, which is a new kind of rebasing model. No, it's more of a DEX now. It's more of a DEX with its own token that they just launched. Felix Exchange launch, which honestly, if Felix just came in February, that probably would have helped Fantom a lot, but it kept getting delayed. But Felix launched, which is a nice DEX, and Tomb is pivoting to building their own chain. They're not focused on being pegged to Fantom anymore. They're focused on building their own utility. Now, I do think this kind of degrades the essence of why it was originally created. Like, why do we need another chain for the sake of it? So, I mean, I have major question marks over Tomb there now, and it's not something I'm not confident. I don't know. It's a hard one to weigh up. I still hold some Tomb. I still LP some with Fantom, but I'm not confident in it long term. And actually, I switched my thesis on this like 5 months ago. Like, even when it was 0.9 worth of Fantom, I was saying like I don't know about Tomb. I was never a huge fan because of the Ponzi-esque tokenomics. In the beginning, I covered it. It was a great opportunity. But if you're holding a lot of funds in Tomb, I think that was irresponsible. And I was pretty clear on that for quite some time. Good DEX. Yeah, it's a fantastic DEX. I just don't know if that's going to be enough to actually prop up the price. I mean, proof will be in the pudding. It's just not a project I'm any more bullish on over the other projects on Fantom, like Beats and Liquid Driver. Yeah, there's not much to omit. Someone just asked me about the inflation rate. We can clearly see here, 2.5 billion circulating supply, 3.1 to come onto the market. That is happening over the next year and a bit. So by the end of 2023, those emissions are done. So less than 20% to come onto the market. So basically, so an increased supply is negligible in terms of supply. By the way, guys, if the market does rip, if Bitcoin ends up pushing to 28K, like it definitely could over the next few months, and we get that big relief rally, then Fantom can rip, to 60 cents. Like, that's not off the cards. So trading this thing could be extremely profitable. In fact, I longed Fantom yesterday, and I made a nice bag. Like roughly, I think I got out here. 12% profit, 7x leverage, almost 100% profit. So you can trade this thing and make a lot of money. So that can also help balance out any losses you may have on spot, if you have losses on spot. Do you prefer keeping Fantom staked or liquid? There's actually liquid staking on Stader. Honestly, I have quite a lot locked up because I don't really care. Because I'm planning on holding it long term. Like, I have a thesis on Fantom. It's if FVM succeeds, Fantom will be a success, and I'm holding it until then. That's probably a year away, so or probably longer. We know how things like this get delayed. So yeah, I have it staked for a year. That's the percentage that I want to hold for FVM exposure. I also have some liquid tokens that are more free to be traded with. I don't trade Fantom a whole hell of a lot on spot. I really just accumulate this thing long term, and then I trade to hedge on using leverage trading. Like if you do want to do that, of course, leverage trading is risky. Keep that in mind. But if you do want to trade, then there is a link in the description to sign up for ByBit. There's a $4,200 bonus to get involved if you deposit. And we also 10x accounts live on the show. Just thought I'd give you guys that option. Of course, you can buy spot on ByBit as well. It's not just a leverage trading platform. You can buy spot, you can sell spot, etc. All right. I think that covers it. I think that covers Fantom. I think, yeah, that's basically my thesis on Fantom and, what I think about the network going forward. I'm excited to see what the team ends up coming out with. I'm disappointed in many ways. I'm disappointed on the biz dev side, I'll be honest. I'd love to have a chat with Simone or some of the community managers. Maybe I'll chat to Michael privately and kind of try and learn more about this thesis. And then I'll update you guys after those conversations. But yeah, until then, that is my Fantom update. And I will see you on Sunday for another episode of DGen's Den. Thank you guys for watching. I'll see you in the next one. Peace out.